All right, hope everyone is doing well today. This is going to be a review over December the 17th, 2021. So, let's see here where to begin. Coming into the prior day, we had a fairly tight sell-off after a pretty strong FOMC rally. 3 pushes up, and we kind of got an endless pullback. And it's one of those days where you look and it's a fairly big trend day, closing on its low, but most of the time it's confusing. It's hard to sell during here. Sideways, a lot of bars, sideways, a lot of bars, sell off, but later in the day, late in the move, hard to sell. So, anyways, I'll make a separate video that covers that. But let's start with today's price action. So, in hindsight, this was the channel, but there's several ways you could have drawn the channel. I wouldn't necessarily use here to here just because of the points, this is just not enough bars from here. Here to here, it's a lot of bars compared to here. But anyways, you can draw a line, connect it to here, do a parallel, somewhere in here, and we'll talk about that in a minute. But on the first thing I want to say is it's important. I think one of the most important things to realize is, especially thinking through this real time, is the market. Everything's dominated by support and resistance, and if you've heard enough about you understand what I mean by that. But there's support and resistance everywhere, and the easiest way to think about things, and this is the way I think about it, and I don't want to sound confusing, but if you really think about it, the market is vacuuming to some support or resistance level. So what do I mean by that? Well, let's take a really simple example from something I remember on the FOMC day. Okay. So let's take a rally from the low of this bar to the close of here. And a measured move up takes you right to this point. Well, we raced up to it, and as soon as we got there, we sold off aggressively. Or, let's take another one. We rallied, top of the trading range. Maybe top of the trading range from here or up here. So, strong rally. Here's a breakout point. Here's a breakout point. Here's a breakout point. And if you look all the way down here, we tested this breakout point almost to the tick. 24 even is the high, 24.25 is this low, and then we raced up. Well, that's a vacuum. The market was vacuuming down to a support level that used to be a resistance level and reversed up. And the tricky part is we don't know which, as soon as you get to a support or resistance level, moving average, the vacuum turns off and we race the other direction. The tricky part is you don't know necessarily which support level when the market's falling is going to be the one that holds. So, as you know, 80% of support and resistance fails. Or a better way to say that is in a trading range, 80% of the time, failed breakouts of support and resistance fail. And again, I'm not trying to sound confusing, but when price breaks below support, 80% of the time it'll fail, or 80% of the time price will continue to do what it's been doing. Easy way to think about that is a breakout is, and this is just stuff, the more you watch out, the more you think about it, the more it starts to make sense. And it's important to think this way when you're looking at the market. 80%, a breakout is a move beyond support or resistance. It could be, and support or resistance could be the low of this bar. It could be the high of this bar. It could be this breakout point, this breakout point, this breakout point, the high of this bar. So, there's tons of them. Price came, here's a breakout point. We broke above it. We closed this gap on the open. So I'm going to start speaking a lot more in terms of vacuum test of support and resistance. And the reason for that, it's important to understand that as strong as this looks right here, this could just be a by vacuum test of some sort of resistance level. And once it gets there, it could fail. It could reverse. So if you think about it, if this is something Alice said a lot of times, like let's look at this day. If you expect price to test the moving average, let's say hypothetically you thought there was a 99% chance here you were going to test the moving average. I don't think that's true, but if you thought that, you would never buy here because there's a 99% chance you would test the moving average. Therefore, what are you going to do? You're going to pull your order to buy, and you're going to wait until price gets down there. It's the same that's how vacuum works. So you can sell off aggressively just for the simple fact of nobody's buying. And it's a mixture. If you're a bear, if you think there's a high probability you're going to test the moving average. And again, I'm not saying there is, I'm just using an analogy. Then you may start selling aggressively until we get to it, all the way down to the tick, and then stop. And then the bulls will start buying aggressively. So it's important to see this and think, this is strong, but this could be some sort of just vacuum test of resistance, and it could fail, and we could easily sell off to here, or, anywhere. Strong as this rally was, it could be a lower high, and we could just keep channeling down. So more to come on that down later on. But first bar of the day, it's a pretty weak stop entry above and below. It's a gap down. Odds are we'll probably go sideways to up. And, the first thing I think is, here's the low, yesterday's low. I think we're going to close this gap. And we're in a support level. We're breaking below a fairly broad channel. We've also got a few magnets or support levels. We've got this lower high. And, you've got this lower high. You've also got and there's more than this, but I'm just drawing the ones I would be looking at that moment. You've got this one, and you can see we went and ticked below it and raced up. Bar 2, big bear bar. Again, this could be just a sell vacuum test of something, test of low this bar. And just because it's a sell vacuum doesn't mean you want to start buying down here. You could easily sell all the way down to here. So, you certainly have to be careful. I don't know what that was. I'm going to move that. You've also got another, a few other targets. Double top, this high and this high. Here's the neckline. Broke below it. Typically on a bar like this, if you want to sell and it's a pretty strong breakout, but you don't want to necessarily sell the close, maybe you want to get in a little early. One thing Al will talk a lot about is here you see 3 consecutive pretty big bear bars. And you think the odds are the first love's going to fail. So what you do, one thing you can do, kind of like over here, place a limit order, sell this high, scalp out. Well, here's a high one buy. It's obviously a terrible high one buy. Place a limit order, sell above it. So, the high, one tick high, point above it, you pick. And you sell it, and you can quickly scalp out. A lot of people will do that. Again, I don't recommend doing that. I think that's a pretty aggressive thing to do, especially on a 1 minute chart. So, from an always in perspective, I'd be flat. I wouldn't do anything here. Do you sell this close? You can, but you're pretty close to a lot of support levels. You've got this measure move, and you've got this down here. You've got the low of the current week. So then you get a big bull bar. So, and this is probably exhaustion. So at this point, it gets confusing. You can buy above it, but it's pretty aggressive. And, we've had quite a few days like this where, here you buy above this bar, get trapped, stopped out. And it's also a 50% pullback for the bears. So it is aggressive to buy here. Let me look back. I think there's another day, somewhat last week, kind of like here, same thing. It's just buying really high. Here's one where We gapped down. Bulls were disappointed. So, and if you buy above it, you're buying in disappointment. It's high in a trading range. So if you buy above it, what do you do right here? Well, that's a tough one. And, you probably, if you do buy above it, I think you stops below the bar. And if you get stopped out, you look to buy again. And obviously you would get stopped out. And now you have consecutive inside bars, maybe 3 pushes down, 1, 2, 3. It's definitely kind of parabolic. You can argue it's a breakout below a channel, but the channel doesn't have that good of a shape. And you've got obvious support levels, pretty much the low of the week right here. I'm going to go to some lines just to make this easier. And one of the tricky things with this is a trading range. I would definitely call this open. While it is selling off, one of the problems you get is, if I can get my mouse to work, that's frustrating. Let's see here. It's in snap mode. Okay. So one of the things you get in a trading range is the signal bars don't look great, and it's confusing. And like right here, if there's one thing I believe a lot at this moment, it's we're going to test this high. And the reason I think that is bulls bought this low, scaled in, made money. And it's not a great buy, but I think it was an okay buy. And if you notice, the bulls who bought here never got a chance to get out break even. They bought the close, they bought above it, it just went straight down. And that trap traders, and some traders will use a very wide stop and buy more above a bar, expecting to at least be able to get out break even on the entire trade and probably retest this high. And if you look right here, you've got a 1, 2, 3, 4, 5. You got a 6-bar bear micro channel. But do you really want to be selling at the low of the week, below a breakout point that is probably going to reverse? And where's the consecutive bars? I mean, look, 2 consecutive big bear bars and it immediately reversed. It almost retraced like 90+% of the sell-off. Tails. Here's a big bar, but it pauses right at support. So is that just a vacuum tester of support? Probably. Then you get an inside bar, and then you get this big outside up bar. And this happens a lot, where you want to buy, but the market's forcing you to buy higher than you want. You want a good stop entry, and you don't get it. And, you look at this and you say, darn, that's a 1, 2 tick bull body that's just not that strong of a buy signal bar, and it's following a micro channel. Well, in a trading range, you get that a lot, where it just doesn't look like a great buy, but it ends up being an okay buy. And you can call it micro double bottom. So, and then for the most part, it's a 50% pullback. Price tried to go 50% pullback of this bar. If you're looking to buy, you probably just put a stop 1 tick above. And in this case, you get lucky, races up. Clearly always in long, buy the close. Pause at the moving average, but probably going higher, testing this breakout point. Looks like this was a breakout below a channel, maybe a 15-minute chart. It's still not that obvious, but it's pretty much channel. It's at least got lower highs, lower lows. Where were we? There we go. So breakout, follow through bar, becoming climactic, stops really far away. And, you gotta think about where you are. You're still in the realm of this trading range. So we channeling down, we broke below this low, we're rallying pretty strong, and you have to be thinking, okay, where are the measured move targets? Maybe measured move target here. That's an obvious one. We obviously succeeded that. Maybe a measured move of the highs of this bar. We succeeded that. Measured move up of these 2 bear bars. Got that. Maybe a measured move from the low of the day to the open. Here we go. Almost got to it, not quite. But if you notice, it's at the top of this trend line. So this could be just a simple buy vacuum test of this. and we could get a very deep pullback. Again, if it's testing resistance, and once it gets there, the magnet can easily just turn off. And then we get a big bear breakout. So is it always in short? It might be, probably not. I still think this is going to be a bear leg in a trading range, so I really don't want to be selling after something like this. I'd rather look to buy. And then you get 1, 2, 3, 4 bar micro channel, 5 bar micro channel. Probably strong enough you're going at least a little bit lower. We're at real close to the open of the day. It very well could be trading range price action. The open's basically in the middle of the day, so you got to be thinking that we'll probably get to the open, maybe find buyers. And clearly we're going lower than we want. Obvious stop entry. May have to test it, but is it always in short? Yes. For the fact that I think but you're in a trading range. Do I think we're going to get all the way down to here? No. Do I think we could sell off further than we want? Sure. So if you're buying, I think it's a really hard thing to do, and I think the first reversal up's going to fail. So if you are, probably better to wait for the first reversal to fail than look to buy. So 2 consecutive bull bars, but after this many bear bars, first reversal up's probably going to fail. You do have an important thing to discuss, and that's probably buy the closed bulls, even though they didn't necessarily get trapped because price went higher and they could have gotten out. Maybe they bought, scaled in, scalped out. It's still a magnet. And there's your high one buy that's probably going to fail. We went below it. Bulls will definitely buy down here. Big bull bar, possible double top, but, probably more sideways. And here you buy the closed bulls. Maybe they bought more above this bar. And you can see you buy this close, buy more above a bull bar here, and there's 50%. A lot of, will bears get out here? Will bulls get out here? They might. It's a wedge, 1, 2, 3, maybe wait for 2 legs. It kind of went 2 legs down. And, what do? Do you buy above this bar? I don't know. Looks like a leg in a trading range. Then you get a bull bar closing when it's high. Bulls will start buying again. Never clearly probably went always in short, but it's a trading range, so you have to be careful. And then get a breakout, weak follow through, pull back, closing this gap, so more trading range behavior. Bad signal bar, more trading range behavior. And test it up to here, outside down. Basically outside up and outside down, so make it it's now the O pattern, make it a small second leg down. Then we got a big bear bar. I'm going to try to speed this up a little. I'm running out of time. And at this point, again, it's a big up, big down, trading range. This is probably a trading range. And you can see stop entry, what's going to happen? Bulls scalped out. Big bear bar, stop entry, what's going to happen? Bulls bought it for a scalp. And bear bar, bad follow through on the breakout. And bulls bought it and went a little lower, got another big bear bar, but then the bulls bought and pretty much kind of channeled down back to these lows. And after all this aggressive buying on the open, we closed as a bear bar on the daily chart. Thanks for watching.